Hello viewers, we are back with another session with AKC Capital's founder director Mr. Aditya K. Chopra. For today's topic on this month's theme, starting your financial journey, we have emergency fund and why it should be your first financial priority. Your phone breaks, over a 35,000 repair. A parent is hospitalized, over 2 lakhs bill. Car needs urgent repair, over 80,000 rupees. Without an emergency fund, every one of these becomes a loan. With one, you handle it calmly and move on. So for the first question in this session, we have what exactly is an emergency fund and how is it different from regular savings?
I think that's a very pertinent question. So basically, an emergency fund is essentially a liquid fund or which is kept in a savings account to be accessed immediately. It's very different from a regular savings, which essentially you're keeping aside for long-term investments, especially in equity assets, which need compounding. All of us can have exigency or so-called rainy day. So an emergency fund really helps you in those times of crisis because you can access these funds within a day's notice and take care of that exigency, be it anything, be it a job loss, be it an unfortunate accident, so on and so forth. So essentially the difference is that your regular savings are earmarked for long-term investments, while your emergency fund is essentially liquid money kept in a liquid fund or a liquid corpus which can be accessed immediately. Essentially, it's a financial firewall that prevents derailing your financial plan if an untoward incident happens.
For the next question we have, how much should I keep in my emergency fund?
I think that's a brilliant question. So how much should you be keeping aside for an emergency purpose? We tell clients this should be equivalent of 3 to 6 months of your monthly expenses. So say for example, if your monthly expenses are around 40,000, then this would translate to around 1.2 lakhs. And if you look at 6 months, to around 2.4 lakhs. This should be the corpus you should be setting aside. Let's look at some numbers. If you have a job loss, typically it puts you back around 2 to 4 months back in time before you found the next job. And God forbid, if you have a medical emergency, on an average, given the COVID scenario, I think on an average the bill could be easily 1.5 to 2 lakhs on a bare minimum side. If you have urgent house repairs, it could be 80,000 to a lakh or even more. And this I'm talking about a basic average household in India. So keep a track of your monthly expenses and keep an emergency corpus which is 3 to 6 months of your monthly expenses. That's the rule.
For question number 3 we have, what happens financially when people don't have an emergency fund?
I think that's a good question. What could be the consequences if you never set aside an emergency fund? Well, we look at data. If the data points out that 60% of the Indians do not have an emergency corpus. So what are the consequences? So God forbid, if you have a situation where you needed funds on a rainy day, let's say you need 1.5 lakhs on a medical emergency, then what do? Essentially, you will end up taking a loan and get into a debt trap. And this personal loan could come at around 15 to 18%. And over a 5-year period, when you're paying this, at least 60 to 70,000%, 60 to 70,000 would be your interest component alone. So you end up paying around close to 2.1 to 2.2 lakhs. So essentially you get into a debt trap. So what we say is that do have an emergency corpus and make sure that you avoid the debt trap. Secondly, if you also have the emergency corpus, it does not derail your long-term financial plan and does not dent your savings unexpectedly.
For the last question in this session we have, how do I build an emergency fund if I have nothing saved right now?
Well, viewers, that's a good question. How do you build one if you don't have? So we always advise clients that it's never too late. You start now and you can take the small steps, be it putting 3 to 5,000 rupees on a monthly basis in a liquid fund which is giving you 6.5%, and start that journey right now. So what you see is that over a period of time you have a sufficient corpus that accumulates, and Also at the same time, you do have an estimate of your monthly expenses. So the maths is very simple, that first start building your emergency corpus by putting that small amount of 3,000 or 5,000, let it grow and come close to an estimate which is closer to your 3 to 6 months of monthly expenses. Once that is done, then you start your long-term investment journey. I think that's the prioritization that you need to do. To sum it up, an emergency corpus should be equivalent of 3 to 6 months of your monthly expenses. If you don't have one, like we said, start now by putting that small amount of 3,000 or 5,000 in a liquid fund which can grow over time. To give you an example, if your monthly expenses are 40,000, then on a 3 to 6 months rule, that comes to roughly around 1.2 to 2.4 lakhs. So it's never too late. Start the journey of building an emergency corpus right now. See you next time.